weekend all. Ira Epstein with your weekend edition of your financial market wrap-up. And in this, we talk the weekly charts, not the daily. It is for Friday, the 26th of August, 2022. Well, all week long, I kept telling my paid subscribers and you here, the freebies, I don't think you want to have any positions going into today's Jackson Hole speech by Fed Chair Powell, which was at 9 this morning. A lot of people go, nah, I'm going to take a shot. You know, if you caught it, you did great. If you don't, there's no way out because these markets just move like lightning bolts when they get going. So what happened is, I think, the important thing. And let's go to that if we could right now. Here's the highlights. The central bank is going to show its resolve to conquer inflation. It's going to take a forceful and rapid step to moderate demand. And at some point, and this is what I didn't like, it's going to slow the interest rates. He didn't have to say that. Just be strong. The U.S. economy is slowing, but there's still underlying momentum. He describes the labor markets as particularly strong and out of balance. That was an interesting statement. Longer-term inflation outlook is well anchored. That is what he's got to fight, and there's going to be pain along the way. 8.5 minutes, and what did the market do? Well, in this particular case, they decided not to fight him. And by not fighting him, what I mean, the market went into a state of a decline. You had the dollar up, energy prices finished higher, grains are in their own world because they're dealing with a shortage now, they're seeing it, and you can see how the sugar was up, but the bonds and notes, moderate declines, nothing huge. They already have built in a lot of this. It's the curve yield that's going to move on that. Today, you were around 26 at one point in the 210, and I watched it come back into the high 30s late in the day. So I believe that that's still going to move out. Could go another, in my opinion, half a point. Why not? It's just a powerful move that's going to happen there. But let's go to the financial markets. That's what this is about. We'll start off with a monthly chart. And we have been underneath, as you can see, for the vast part of this year, the 18-month moving average of closes. Well, that keeps the bias down. In my opinion, when the market's over the 18-month, the bias is up. The bias is down when you're underneath it. Next, the market for a good part of the summer, since June, has been trying to rally. You see that. And the market got up very strong, and suddenly it's coming back into line where it's not too far away, about 40 points from challenging the 18-week average of closes. However, the bias is still up since it's over that particular number. We then get to the charts on the weekly, and you can see how this whole rally that began right here around June 17th carried up through last week, and finally you're getting a correction. When you put the swing line on it, which measures, and this is something I created, I actually created it for my son, who is now 38 or so, when he was 13 years old. Goes back a ways. And I said, if you put these lines on a chart and I sit you down at the dinner table, which my wife, of course, at that point hated, and I said, I show you any chart, forget the name, can you tell me if the market's trending up or down? And I was able to do that. That's that part. Then you filter this. It's really a simple tool, but I have it on every chart I ever look at, and it changes how I look at a chart dramatically. In this particular case, the trend is up. Higher lows, higher highs. If you don't believe that's an uptrend, then this makes no sense to you, but I don't know how you define a trend. We can all take that simplicity and add filters to change it, and that's what I do. I then say, well, to be in an uptrend, you have to have the bias up, and I measure bias with the 18-week moving average of closes. If you're over it, the bias is up. It is not uncommon that if you get above it, that when you break, the market likes to stop at that 18-week to try to figure out what to do next. The same thing when you're under it. You go up to it, you fight a battle. As you come down from it, you come back in there. I hope you're understanding the concept. Does that mean you can't at some point just go slicing through it? You did that. You did it on the rally in June. So the answer is no. Nothing is on a chart every single time. It's the things you're looking at that are the 70, 80, 90% numbers. I'm not interested in half the time it does this, half the time it does that. It means it doesn't do it. I can throw a dart and I can hit the board half the time, not half the time, probably. The word is probably, depends how much I drink. So as I'm watching the market pull back here, I am not as bearish as some. I think this market's got to prove itself. It didn't go through that number. Next, I look at Bollinger Bands because 95% of the time, the market's going to trade within a Bollinger Band. And you can see it hits it, you can get through it, you don't stay under it very long, and you don't stay over it very long. And the whole bull market we had, if I step back here, tell me how often you see that just getting over it and staying over it. It doesn't. That's the nature of the algorithm. So as you approach it, upside or downside, I'm suddenly looking and saying to myself, well, where's my momentum? And I measure momentum with the slow stochastic. Now, on the weekly edition, I don't use getting overbought or getting oversold. I do that on dailies. Because of the length of time on months and weekly charts, you're either pointing up, pointing down, or you're embedded. If you haven't learned how to work with Bollinger Bands, you are trading with this hand or this hand behind you. You have no idea where these magic resistance numbers are. I promise you don't see them on your chart. You're doing this. What the heck? Where did that come from? That's what you're fighting. And it's not just me that's using it. This is a very popular tool. The difference between how I teach it and others is they're just using the raw number. I'm using momentum because it adds the other layers. At the end of this, I have an ad about the course that I have. It's called Enhanced Bollinger Bands. Folks, it's under $100. It's about 13 chapters of videos. You will walk out of it with your equivalent of a master's or a doctorate degree. You're not going to be like your neighbor who's looking at Bollinger Bands if he even knows what they are. A guy that thinks he knows them, I'm going to carry you to the next level. I use it on every single chart I've ever looked at once I discovered the importance of it. And I didn't create Bollinger Bands. John Bollinger did. I didn't create stochastics. George Lane did. I know these men. I've met these men. They've been on my TV shows. I used to have a popular TV show on the old FNN network, which is today called CNBC. And on Wednesdays, I bring in people from all over the country, the top market analysts, stocks and commodities and options traders. The Nigerians were on the show, the Joe Granvilles, the Robert Prechters. I can name names upon names upon names. And to get on the show, they had to spend some private time with me, and I'd throw my ideas at them, or I'd ask them to explain what they're doing in a way I could understand it. You gather so much knowledge, and then the interviews would begin. Just bringing you up to date with what I've done. I know I've got old hair, gray, but I've got my hair still. My brothers are bald, by the way. One of them is, one isn't. And to make a long story short, that helps sometimes. You know why? Been there, done that. I know not to go through these crazy events like today. And you'll say to me, well, why weren't you short? And I would say, well, why would I be short? The trend is up. You walk away from those events. So in this particular market, it's got to prove itself that it's got legs to the downside. It hasn't done it yet. How's that for a surprise statement? When you come to the Dow, higher lows, higher highs, literally right up to the Bollinger Band, runs out of its momentum and pulls back. You know where I think the battle's going to be, the 18-day average of closes. You've lost the upside momentum, but you haven't broken the uptrend. In the NASDAQ, same thing. And in this one, you ran to the combination, the deadly combination of be it 100-week moving average or a 200 in a Bollinger Band. Let the other sucker own it. That is not the smart play. The smart play is you're out of those markets when that happens and you stand back. Understand this vehicle. You're trading futures, 90% leverage. You can't get away from that. I guess you could put up the full cash value in your account and don't be on margin. You'll never have a margin call. Put up 100% value. You either own it or you take delivery of it. It's one of the two. If you go right to the end or you get cash. It's going to be one of those three things. But in any case, now I wait. So I'm not as convinced, next week we're going to just fall apart and keep going. Could you? Yeah. Could it turn into a downtrend? No. What's my definition of a downtrend? Lower highs, lower lows. Even if you went straight down, you'd end up with a higher high and a lower low in all of the indices. The Russell, same thing. Got right up to the Bollinger Band, bang. You got down to the band and the 200-day average. Right here, I was telling you here in these videos, the fillet, the best part of the meat is out. Yeah, it dropped a little more. So what? You're never going to get the top and the bottom. You want that big slice in between. You've been in a downtrend, and that's where you went. You've been in an uptrend. You're at the Bollinger Band. You're only going to stay over at 5% of the time. And then the next thing is you're going through a major report today. Why? That's my concept. Now we get to the bond market. And with today's action, you fell back. But more important, what is the pattern you're seeing in the Bollinger Band? It has gone from this real wide pattern back to what we had here. Do you see it forming right now? That's what you're looking at. This is the churn. Did you hear the word? Churn. It means you're going from the lower band, right through here, to the upper band, not breaking out of them, churning within them. You need to narrow in. Upon the narrowing in, the next leg happens. Let it develop. It hasn't developed. It's developing. Current tense. Same thing in the 10-year. You now have narrowed in, just the way you were doing back up here. Once you get these and you get your breakouts of them, that's a whole different game, and I describe them here to you, how I think you trade them, what you do with them. I won't always be right. There's plenty of times I'll be wrong, but the beauty of it is this chart work will take you also out. And that's what I love about what we're doing. So right here, there is no trend. On a weekly chart, you have a higher high and a lower low. Today, you took out that low. That's what made the lower and low. The dollar index is still bullish as can be. But can you buy an upper band? I would never do that. What I would tell traders is you wait to see if you get embedded. And you'll say, Ira, what the heck's embedded? Embedded is when these numbers are going sideways over 80. Embedded is when these numbers are going sideways over 80. You don't have it over there. More times than not, you get overbought or oversold. So you're overbought right now. Big rally today might result in a pullback. Then you go to the daily charts to see, are they embedding there? What's going on? Euro, same thing. So today the pros, in my opinion, were in the futures market, covering shorts in the euro, longs in the dollar, the opposite of what your broker's going to tell you probably over the weekend. Just how the chart action is. In the Canadian dollar, I see a market that is caught in a mishmash. You've got a lower and low, a higher high. You haven't had a real good program here of trading at all in this. This market's really caught between the 100-day and the 100-week and 200-week moving average. That's what it's been more or less caught in. You can almost see the pattern right through it. Pay attention. I don't think there's anything there. In the yen, so today's low was 72.67.5. Getting ready to challenge this low. Higher high, lower and low setup. Momentum pointing to the downside. Bitcoin, is it going to break out to the down? Where's the battle been fought? Take a look at this chart, and if you don't see it, you need to take my full charting course. You don't see the 200-day that the market is latched onto and been around now since June. It's marking time. The Bollinger Bands are not NOT in play. Sometimes they are, sometimes not. Most times they're way closer than they are right here. Certainly if this market started dropping, it could be in play. But from 21,417 to 14,792, I don't know. To me, that seems like it's $6,000 away. I think you're caught at the average, and that's how I'd be looking at it. Trend up, bias down, literally untradeable on a weekly chart. Now, the differential between Brent and WTI, in an uptrend, upside bias, stalled out at 6, trying to move up again. And when you take a look at Brent, this was an interesting chart. What did the market do? So if we take a look together, the market moved from the upper band to the lower band for all purposes. Then it started fighting right here at the 18-week average of closes, what I call the line in the sand. But in the pattern, you had lower highs, lower lows. So the pros are selling. Stops, in my opinion, at least over these highs. And because 95% of the time you stay on the Bollinger Band within it, not out of it, within it, I think they're taking money off the table here. And now we get to this today. That changes the whole pattern. You suddenly have a higher high and a lower low in a market that is not embedded. I'll let somebody else want to play that one. I think you went neutral. I think out of the downtrend today, but not in an uptrend. Do we understand that? Same thing happening in WTI. The last high, 95.05, you hit 95.76. And if I step back with you and I just remove, if I could, let's see if it'll let me do it. There we go. It is going to let me. The lower highs, the lower lows, running the band. You take out that high, you want to be out because you're not embedded. And here's what the market does today. Bingo. So, reasons to not be involved now. I don't know what the next part of it's going to be, but this bear leg came to an end by my definition. I don't care about other chartists, by my definition. Rebob gasoline is still bearish. I don't recall a day this week that at the end of the day reviews, I didn't tell you I thought gasoline was not going to rally. I think it's going down. It will not have the Labor Day rally. Now, I don't give a darn. We've already accomplished what I want. You're knocking on the door of the Bollinger Band. You're down 5%. A nice decline today, in fact. So I feel pretty good with that. Let's get to the next chart here. And that's it. So that covers them. So as I said, I'm always looking at the Bollinger Band. It's not the only thing I look at, but it gets hit so often. Did you hear what I just said? So often you've got to learn how to trade with it. It's like an outside day. You know, I was working on my outside day course, then unfortunately I had oral surgery and I caught COVID during the summer, put me down. I'm now healthy again. So guess what? I had my IT people in this week. I said, hey, going right back to the course. I want to wrap that up. It's my number one thing I want to do in September. So I will. But that's where we're at. But you've got to learn how to work with these Bollinger Bands because they get hit so often. Take a look at this and consider making your move to it. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.